Welcome back to my channel, and today we're going to be talking about inflation, S&P 500, what led to the recent bull rally, and what we can expect from here. And I'm also going to share the calculation methodology and how I forecast inflation for the last 6 months and what I expect in the next 3 to 4 months as well. With that being said, let's get started. Okay, let's get straight to the point. And this is actually a slide I prepared within Investing Accelerator for many months now, and we look at the inflation month by month. So let me just move myself to a more comfortable location. Here you can see that for May inflation, which the data is released in June, my forecast was 4.03%. And the inflation was 4.07% actual. So you can see I'm pretty much bang on, and I'll explain how this is calculated in the rest of the video. And for June, inflation forecast is 2.93%, so basically 3%. So that's what I'm expecting next month. Okay, so let's talk about S&P 500. Now, for the last 12 months or so, S&P 500 has been flat or slightly down. So if you're long-term investing, you're not really getting too much gain out of it until recently, which is the last 3 weeks. Now, from a technical analysis point of view, you can see that the bottom has been forming, and you can see that there is a triangle forming. You can see the lines I drew here in green, and now price has broken above S&P 500 420 level, and for the last 3 weeks is going up, and that's called a breakout. And a breakout means that price has been hovering within a range for a set period of time, and then it gathered enough momentum, so it went either up significantly or down significantly. And breakouts are important because if you are long-term investing and you need to make money, you need the stock price to go a net positive or a net negative for you to make money. So you're basically waiting for a breakout. So as a long-term investor, during this period of time, you would need to be very patient because you're not necessarily making money during this time, and you're waiting for that breakout, and finally it is happening. So what is leading this bull rally? And this is mainly led by tech. One of the easiest way to look at it is QQQ, which is an index fund, and it's quite safe. And if you don't have it, you can buy it over time. And here you can see that the tech rally is led by the increase of QQQ, which consists of the major tech, which is like Apple. Here you can see the rally is very consistent. Microsoft, you can see the rally is very consistent here as well. And it's also led by semiconductors like Nvidia. I'm sure you have heard of that, and it has gone up from 150 approximately in the dip all the way to 400, and also AMD as well, slightly lagging behind, but is still offering a very strong return from around 60 something all the way to 120 to 130. Now, a couple of other tech stocks to note is also Google coming back up from 80 something to 124, Meta, which is Facebook previously, when coming back up significantly, and also Amazon. Now, the reason why I need to bring your attention to these big tech stocks is because the rest of the markets has not moved as much. And this initial part of the S&P 500 rally is led by tech. This will become important later on when you're looking at the S&P 500 and forecasting the future. Jumping back over to the inflation data, let me just explain how I calculate this and what I'm looking at and how this thing all works. Now, on the right-hand side, you'll see the chart for inflation. Starting from last year, September, I've been creating this forecast, and the blue is the forecast and the green is the actual. And here you can see that for the last 9 months or so, you can see the inflation is steadily going down. And you can see my forecast is not that far off from the actual inflation being reported. Let's jump over to the data source to show you what I mean. So I go to a website called US Inflation Calculator, Consumer Price Index, and it has all the raw data here. And this is the inflation index. And the way the inflation year over year is calculated is you take the number here, let's say 299 for January, divided by 281, and that's actually how you calculate the percentage increase for inflation. And if you look at the next couple of months, you'll see that, well, the denominator, which is the 296 here, it's already determined. So you're really just forecasting what this number is going to be. And the next inflation is going to be released July 12th. And here you can see that for the last couple of months, the inflation index has actually gone flat. So it's only increasing by maybe 1 to 2 points each month. So then when I'm forecasting inflation, I usually hold this level constant, rounded it up slightly higher, so then we can look at what the inflation would be once I extend that timeline. So that's exactly what I did. So here you can see that back in December, the inflation index was 296.8 divided by 279, so it's around 6.34% actual, and my forecast was around 6.8%. So it was pretty close, and then afterwards, mine was 5.7, 6.4 actual, 6%, 6%, and then now we're down here 4%. So for the next month, I'm rounding the inflation index up to 305 and the denominator to be 296. So that will give us a forecast inflation of around 3%. So this is actually quite important because if you extend this timeline to the next couple of months, you'll see that the denominator doesn't really change because it has reached a steady level. And if the inflation index is able to maintain at this 305 level, then we're looking at inflation of approximately 2.5% to 3%. And that's exactly the range the Federal Reserve is targeting. And I'm sure that the economists, analysts within the Federal Reserve and big banks already have this forecast extended. And it's probably a little bit more accurate than I am. But what's important is when you look to the right, you can see it flattens. And this is within the range that the Federal Reserve is expecting. Now you're armed with this knowledge. Then you can go back and think about what the Federal Reserve is doing. In the recent week, the Federal Reserve announced that they're pausing interest rates, and they want to look at more economic data to see, what's happening first before deciding on another hike. And it's quite important because for this month is 4%, and for the next month it's going to be 2.93%, possibly 3%. And when we reach that level, the Federal Reserve will have the data to justify that no more rate hike is needed. And with a couple more months of this level of inflation index, as long as it doesn't get out of hand, then suddenly Federal Reserve will have the breathing room it needs to cut the rates if needed or just maintain the rates at this level. So that brings me to the S&P 500. So right now, the big banks, the investors that are savvy already know that the rate hikes are coming to an end. And that means the cost of capital, the interest rate, is not going to increase any further. It might decrease in the future, and right now the forecast is going to be next year that they're going to be cutting the rates. That means the tech stocks will be more valuable going ahead using their valuation model, which is why there is a rally now. So as long as the companies are growing, profitable, which is usually how we select a good company within Investing Accelerator, and have a good future, then they will be going up. We previously talked about Amazon, Apple, Google, and some of the other stocks we talked about, like the semiconductors, and also Shopify here, it's going up as well. That actually explains the entire rally between inflation, how it affects S&P 500, the valuation model improving, and the big tech leading the rally. Once the interest rate steadies and start going down, then there's going to be more capital flowing back into the market, and which will further enhance the rally. As of right now, the stock is breaking out. Sometimes when you see the stock breaking out, in this case I'm talking about S&P 500, there might actually be a correction first and then going further. So if you haven't gotten in and you're looking to get in, then you should start researching on some of the companies that are still at a discounted price that you can get in at a reasonable price point with a good prospect. And you should save some cash in case there is some sort of correction coming up. But looking at the rest of 2023, it's going to be relatively bullish as long as nothing in the system breaks. Then 2024, the first half should be relatively bullish as well. So you can discuss this with me within the Invest and Retire community. It is free. I'll include a link below. So it has 782 members now, which is good. Let me know what you think will happen to S&P 500, and I'll happy to chat with you in the Invest and Retire community. And if you have a different forecast for inflation, you can let me know down in the comments as well. I'll see you in the next video.